that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time. Start with the charts on the broad indexes, go through commodities, oil, gold, cryptocurrencies, any individual company news that's grabbing our attention, and kind of give you guys some insight and analysis. Have some fun while we're doing it and help you better run your daily routine as a trader. This is the perfect place for you if you are a trader, by the way. Welcome to Tackle Trading. If you're brand new to our channel, by the way, click subscribe, click the bell, come back and join us on a daily basis. We go live whenever the markets are live, 12:30 p.m. Eastern, for about an hour and a half as we're analyzing the stuff on a daily basis. And if you're a veteran of our community, hashtag Team Tackle right in the chat. Hashtag here at Tackle Trading. Love seeing the energy. And by the way, keep the positivity and the conversation going. I've loved that for several months now. I think you guys are doing a great job there, helping each other, talking to each other, asking questions, and let's keep that up over there as well. On today's show, we are going to talk stimulus. We're going to talk Apple Computer, as Apple Computer actually is maybe the story of the day, breaking out a little bit here this morning, looking very, very strong. Dow component, S&P component, and the biggest company in the marketplace had some pretty good news on their production of their iPhones for 2021. We'll analyze that. We've got charts we got to break down one step at a time with Coach Noah. Coach Greg Holmes, the old money man, is here as well. We're going to be discussing dividends, a few cover call ideas a little bit later in the show. We got a jam-packed show planned for you. Let's get right down to business. Let's start with Noah. It is Tuesdays with Noah. How are you, sir?
Oh, I'm feeling pretty good now that I've got a proper introduction. That feels great.
Well, I always enjoy having, just anybody come to the show that's one of our coaches at Tackle Trading. But Noah, I love the way you do charting. I enjoy just kind of the methodical nature, the way you approach price action. So, man, welcome. And I'm excited to have you here, my friend. Coach Greg Old Money Holmes, how are you doing today, sir?
Fantastic. Thanks for having me out.
Yeah. And Greg, I know you and I were talking a little bit in pre-production. You've got a couple of ideas around covered call trading as well as dividends that we're going to talk about a little bit later in the show. Is that right?
Absolutely. That's one of my favorite things.
And the second Mark heard that, Mark showed up and he wants to be here to hang around Greg and maybe snake a few of those ideas for himself. Right, Marky?
Oh, absolutely. Listen, a good covered call idea, I am always down for.
And check your mic there, Mark. It may be up on. Yep, there we go.
There we go.
Try it again. And all right, let's rock and roll here, guys. Let's start with the market itself, and let's start with the technicals. Noah, start with the S&P 500 if you can, and kind of break that down for me.
Yeah, you bet. Well, I think everybody was watching this market for that pullback to fire off, and I think yesterday we got a little bit of that price action to the upside. Nice 3-day pullback. A little spike in volume yesterday as we saw the prices trigger up. Pulled right back down into the old support resistance zone and that rising 20-period moving average. So that can act as a nice catalyst. And today's green candle, I think, reestablishes a case for the bulls. We'd like to see that candle stay big and engulfing and close near the high. And that would give us, again, potential to kind of pick it up off the dip, off that retest. Like what I'm seeing on that. Yesterday's, that little spike in volume. Want to go double check where that volume came in early in the session or if it came in late in the session. Because it is above average. And again, if we were to see a violation of this 3,630 zone, somewhere in that zip code, that could lead to more selling. So we got to watch this zone carefully. Upward confirmation in price is great for the bulls off of a pretty pullback, but a violation, you could see a deeper pullback down and probably the next support zone. If that violates, which will put you down towards, 3,550, 3,540 down in that ballpark.
Mm-hmm. So if you can, and just because, especially now that we're finding this pivot a little bit here today, at least the first semblances of it, can you go through the weekly as well as the intraday charts? Give me a few different time frames.
You bet. So you back out to the weekly chart, and I got a lot of time there. Again, just coming off these all-time highs. From here, it just looks like a little inside consolidation in a doji. And, the old doji, that's probably one of those classic chart patterns on the candlesticks that people learn first. An inside doji tells me it's an inside consolidation. And that's they say that the doji is indecision in the market. Market's not sure whether it's buying or selling simply because we haven't seen a big price change in the this is just, this week. So this candle really counts for this week only, just the, last 2 days. But that inside candle is something we can watch. Again, otherwise it's a breakout. Context on a weekly chart is a breakout and testing new highs and just barely pulling back off that. So the pullback here on the Daily chart, again, back into that 20 period moving average. What I'm looking for here is bottoming patterns. And there actually was, yesterday we did see confirmation. I actually thought the market was going to get up and go just based off of what I saw, particularly with the overnight futures trading up. When we break that down into the intraday chart, it's down into 15 minutes or so. You can see where during the Sunday session, prices actually gapped up. They came into the Monday open and they started, trading pretty bullish right up until they opened, then boom, sell off. So most of the day it sold back and gave that ground back. Now what we see is higher low. This is what I see on the intraday chart that has me interested, is that it came in and put in a bottom today, and that's higher than it was last week on Friday. So higher low, price is moving back up, another higher low, possible breakout here. And from that perspective, maybe we back it out a little bit longer time frame intraday here. Let me go swap that out for, say, an hourly chart. And you're just looking for that double bottom. It's within that 36.40 zone, and it came down and tested the 36.20 zone. But that's in my opinion, Jim, a double bottom gives you that kind of W pattern, and you're really looking for a breakout. And if you want confirmation, some traders are going to wait for it to take out that overnight Sunday high. Some traders are probably going to be already in. I like at least 36.80 for confirmation, and maybe, I don't know if you have to wait that long. Some traders are going to wait until it takes out that all-time high. I'm a little bit more aggressive than that, so I'm good with the confirmation I'm seeing right now intraday. I like that higher low, and I like seeing it maintain that off of that 20 period moving average on the daily chart. Really, really big catalyst that people look for. And again, I like it when I have clear signals like here. We got the 9 period moving average on the daily chart and the 20 period moving average. And I think both would make fair price triggers.
Mm-hmm. Greg, come on in here next if you can. I appreciate the technical breakdown. I just want to get Greg's read on a couple of things. Number one, as Noah's talking about these charts and these markets, obviously, Greg, you've been trading them day by day as this has been developing. How are you approaching this kind of market condition right now, Greg?
Yeah, it's interesting. We had kind of a beautiful little textbook pullback there. We're trying to find some legs here. If you start thinking seasonality wise, typically this time of year is usually a little bit more bullish than some other times of year. So we got that going for us. There's really nothing out there that's showing me any reason to get bearish, right? So this pullback, as far as I'm concerned, was pretty muted. It was an average volume, with the exception of yesterday, average volume type pullback. Excuse me. It's really not given me any reason to think bearish. And so if you look at the overall trend, you still got to have a bullish look at this as far as I'm concerned. And I've been playing it to that side. Just an opportunity here, a short-term opportunity to pull back to a level of support right at that 20. I think it's 20 MA you got there. You know what I mean? This market just feels like it wants to go higher. Because there's not a ton of volume and a ton of volatility, typically those types of markets kind of like to drift higher. And we're kind of seeing that. If you look at the size of the candles in the last couple of weeks, they're not huge like they were 4 weeks ago. They're just kind of drifting upwards. And I see that trend continuing going forward, just because there's no other catalyst out there that I can see that's going to change that tune.
Mm-hmm. No, if you can real quick, flash through the Dow, the NASDAQ, the Russell, come back and finish on the S&P. And then I want to have a discussion with the crew about stimulus, the expectations there. We're starting a Fed meeting. There's some news items I want to get through, but quickly flash through the indexes and just tell me if you see any relative strength or weakness against them.
I'm not seeing a ton of strength in the Dow, not weakness per se, but it just petered out here. Prices have consolidated. You got higher lows. It failed to really break out. It came up and had that breakout set up and just kind of poked its head up. Didn't really do much, came right back down. Still trading above the 20 period moving average, has the potential to break out. And that sideways consolidation certainly can break out. But as far as all the indices go, I like what I see on the S&P and the NASDAQ better. And the Dow, again, just kind of flat. And that consolidation can lead to the breakout. So I wouldn't say the Dow is not going to pop and or break support. I mean, it could do either way. But just that prolonged pattern kind of has a little bit of rounding top feel to it is probably the best way I'd describe that. Whereas the NASDAQ feels more like a textbook little break and pullback with a little bit more energy. I like what I'm seeing here on the NASDAQ with that. Let me get zoomed in on that and kind of really point out what I'm seeing. I like the break of the high It, gave us a couple of days closing up. Well, average volume dropped a little bit. It wasn't over the top. It wasn't too much below typical volume, but kind of soft on the breakout. And then we saw a day of selling right back into the old support resistance zone. And this is where you get what, I don't know what you call it, but multiple catalysts for support, where you have the 20 period moving average, the old support resistance neighborhood. You get the signal candles, kind of a small doji like candle, longer shadows, couple of days of confirmation up. I'm seeing more strength out of the NASDAQ than I am out of the S&P at the moment. So I like what I see in the NASDAQ. Tech sector seems to be leading that. We found, how many patterns did we find in the semiconductors, during the scouting report meeting last week?
Oh, we discussed at least 10 different.
Oh yeah. Like that entire sector had really nice looking pullbacks. And so to see that in the index, I always love it, Tim, when the index reflects what I'm seeing in my stock picks. Like when I have a clean pullback on the index, I got a clean pullback on the tech sector. I got a clean pullback in semiconductors. And then I'm looking at my AMD chart, or my, Taiwan semiconductor chart, looking for that to all confirm in the same direction, kind of when the stars align, technically speaking. So I love what I'm seeing on the NASDAQ. Russell, it's grinding, but it's kind of got that slowing momentum look to it, where the distance between those peaks is shrinking. It's not a real obvious technical thing that you see, but it's got that same just kind of rounding top aspect to it, especially if you count like the shadow there. But if you take that out of the equation, it just kind of feels like its trajectory is petering out a little bit. So not weakness, but slowing momentum. And I usually like that for a correction and a pullback, and look for the buy the dip, but it is still closing right out near the high. So you can't really say that that's done going up. It's just kind of in a rising wedge type pattern right there. And that can be a warning of slowdown.
And obviously that Russell 2000 has had incredible strength here for the last 6 weeks or so as it's been taken off. A lot of the themes in the market are pointing towards small caps benefiting from a reopening theme next year, Mark, the virus, all that kind of stuff, and U.S. strength in the economy. Marky, let's talk a little bit about what's happening in the news. What is the latest you have on stimulus, by the way?
The latest scuttlebutt is Pelosi has asked that the leaders of both the House and the Senate, Schumer, McConnell, McCarthy, all get together to iron out their differences, right? There's been a lot of smoke recently. A lot of people think this is going to get done at this point. There are still some sticking points, but it's like we've seen this a lot, right? The longer they can provide positive stimulus headlines, these serve as continual catalysts. So we don't have anything concrete yet, but we still have continuing negotiations. Knock on your door if you've heard that one before.
I've heard that one before, but that ongoing continuing negotiation can provide a little bit of a bullish backdrop to the market on the expectation, all that kind of stuff. I did see, like you're talking about, Nancy Pelosi reaching across the aisle, reaching to other politicians, saying, hey, let's have a discussion here. As the ongoing negotiation and discussions are happening, obviously, I think the market is waiting on something. And it looks like we're talking still around that $908 billion package. I did even see Susan Collins yesterday, Mark, giving some kind of press conference where she was discussing, how they're trying to work these details out and all that kind of stuff, the Republican senator from Maine. So it's interesting. The conversations are ongoing. It looks like something will happen. I think that's isn't that the expectation of the market right now, Mark? Something's going to happen.
Yes, that something is going to happen.
And I think we're all still waiting to see what the price and action will be after that, if it can sustain a trend and all those kind of things. I believe you will get a bullish response on the headlines. I don't think there's even a debate about it, but we'll see. That's the thing about the markets. We're sitting here up at the top. Outside of stimulus, Mark, there's been some troubling COVID data here recently. I even saw Andrew Cuomo out of New York talk about, hey guys, we might have to shut down for a little bit in certain areas of our economy if we go through some of these problems. You've had some limited restrictions in California. We're operating on the backdrop here with these vaccine headlines about Pfizer getting it out there in distribution. Moderna just today, give me mRNA if you can here, Noah. Ooh. Moderna, the other part of the vaccine storyline over the last month and a half, they're now getting FDA approval, it looks like, and they're going to start shipping as much as 6 million doses as early as this weekend, next week, Mark, which actually is going to be a huge deal upon the rollout here. So how do you kind of handle this backdrop here where we know the vaccines are rolling out, but we still see kind of some concerning data about economic activity and potential restrictions?
Well, I mean, it's like that kind of backdrop provides an amazing cash flow backdrop. And that's what, I mean, we've talked about with pro members for the last month on our Sunday night show where we prep for the week, is that we don't have a strong bullish theme. We can have bullish headlines that pop up every day, kind of one-off things. We don't have a bearish theme. I mean, there's not a bearish theme. I mean, there's not the election risk. There's not COVID. There's not trade war. There's not these bearish themes that emerge. And so the headlines battle back and forth on a daily basis. Yesterday, I mean, come on, think about the insanity of and the silliness of it all. Yesterday, it was lockdown concerns, and now it's vaccine optimism. I mean, come on. Listen, those headlines are just interchanging day after day after day as the markets form a really nice, consistent cash flow pattern. Eventually, we'll get a catalyst. Eventually, the things will get moving one direction or another. But until then, you know, ignore the noise, pay attention to the chart.
Mm-hmm. Yeah, and the Moderna news, I do think, is something to be optimistic about. I know that that's the one that you don't have to have quite the same facilities to store it at, like the Pfizer vaccine, the FDA approval. In fact, Mark, you know, that mRNA chart right here is down a little bit here today. I don't think there's a stock trade here, but that FDA approval kind of sets the stage for them rolling it out. So I think there's reason for optimism around that. But you're right, though. It's the same churning headlines about, well, restrictions, lockdowns. Nope. Positive vaccine news, and it kind of provides a little bit of a back and forth backdrop. I think stimulus is the real thing the markets are waiting on, and could actually provide a little bit of a breakout. Let's keep flashing through the markets here, guys. There's a bunch of company news I want to get to, including Apple Computer right now, and we will do that. We usually punt all the company news till later in the show. This one, the biggest company in the marketplace, I think we can talk about right up front, AAPL, if you can. Interesting, you know, here, Apple is indicating out of a Nikkei report here today that they're expecting iPhone production rates to go up nearly 30% year over year in the first half of 2021. We all know this new iPhone that's come out here that they announced just a few months ago. People are starting to purchase it. Now production and demand are starting to hit that. The stock is up here on a day where the market's not doing this kind of thing, Mark, not 4%. Apple's up now 4%, pushing towards a breakout. Let's start with the technical analysis on this one, Noah, and give me a read on what you're seeing here in Apple.
Wow. Yeah, that's what I'm seeing on Apple. It's a pretty good looking chart, Tim. It's got everything I like to see in a breakout. It's got pattern. It's got a nice shallow base here. So we're talking about this 125 resistance zone, and you know, plenty of room for it to run up to that previous all-time high. You got really a textbook, not really perfect textbook, but it's a pretty darn good looking ascending pattern setup. I don't know if you want to call it a cup and handle or an ascending triangle, and you could probably call it both. This one didn't quite come up and test that. If this had come up and tested that high, it would have been an ascending triangle. But because it didn't, I'd say it's a ascending cup and handle. I don't know what you call it, but it's pretty clean break. You got volume kind of tapering down, getting quiet before the breakout. That's pretty typical. What I want to see on the breakout is I want to see participation volume level spike. Now, we're just early in the session here. I'd be thrilled to see the volume by the end of the day showing a little bit higher and for the price to maintain a close out there above resistance. Then I think what you have is a momentum trade on your hand. You could be triggered in right now if you were aggressive. If you get a strong close above that previous high today, then you've got basically a momentum trade where you look for a trigger above the existing candle high, and you probably put a stop either below the candle or down below that 9-period moving average, maybe looser if you want a position trade, kind of follow your step system rules. But there's a lot to like on that chart, coupled with the rest of the sector and the tech, like we were talking about before, looking like it's got that bullish pattern and signal. I could see some follow through here. So I like what I'm seeing on the chart. Guaranteed, not a guarantee, void where prohibited, not valid in all states.
Mark, how big is this news? I mean, this is a raw demand expectation. It's almost like giving guidance a little bit.
It's a good cast. It's a legitimate catalyst.
Right.
And sometimes people ask me, how do you like determine like what is a legitimate catalyst? What is a real theme? I mean, it's qualitative. Like, you know, there's no mathematical formula you can put in. So it's always opinion. It's always qualitative analysis when somebody says, this is a real theme. This isn't a real thing. This is a real catalyst. Whenever you go to the demand side of things, Apple is all about their ecosystem. And the way people get more into the ecosystem is they sell more iPhones. It's at the core of the business. It is at the center of getting people into that ecosystem for Apple. The moat that Warren Buffett would like to call it. One of the reasons he's so big on Apple is that it's not that Apple is a great company, right? He has these core principles he looks at, and it is the ability, once you get people into the Apple ecosystem, I mean, it's what we've seen in Apple for the last 3 years. It's about the services. It's about the services. It's about the services. Sell more iPhones, you get more people in the ecosystem, you grow on the service revenue. It's a legitimate catalyst.
Mm-hmm. Just one real quick thing here, Noah. Can you back that out to a weekly and tell me what you're seeing from a bigger picture perspective? Obviously on the daily, detailing that breakout. I love that analysis there. What are you seeing on the weekly here?
Double bottom, kind of a W pattern, same kind of ascending triangle pinch there. This has got really just good looking. It came down and rode that 20-week moving average, 9-week moving average. Seeing that after, the deep pullback, it put in that same higher low, like it, plenty of time till earnings, clean break. And I think with this previous high out here, I'm assuming you don't have a ton of volume near those candle highs. I'd want to throw on like a volume profile indicator. This is one I don't know if we talk about much, but I think it's a fun one to throw on a chart when you're looking at where volume accumulation. Is that what it? No, let's see here. Volume profile. There we go. Throw that on the chart, and what this gives me is it kind of tracks where all the data has occurred. Now we've got enough data loaded up here, and it might be helpful to back it out to the daily chart and put that on the same scenario. But that high out there, you got very thin volume historically speaking. Now that volume's off the chart on the weekly, so let me switch this back to the daily and just kind of point that out.
Mm-hmm.
The number of transactions that occurred out there near the high is not that significant. You'll see more resistance right here at the current price level, where quite a bit of volume is accumulated at that price level. And what that tells me, Tim, is that that's a reference point for more traders. So more traders are calling 124 a reference point than are calling the 137 high. I feel like the 137 high is like some poor souls got caught at the high because they got excited about the break and then they bought it up here. But the amount of volume that actually transacted at those prices is small by comparison. So when you have that low volume profile on a breakout like this, I put less weight on that resistance. It's still there. It's still a reference point. People are looking at it, but the number of transactions at that price point really pale in comparison to what we're seeing here as it breaks. Quite a bit of accumulated volume has occurred at the 125 price level.
Mm-hmm. It's really interesting as you're breaking down this volume analysis. Obviously, there's been so much time in the consolidation in that like 110, 120 range. So there's a lot of transactions in here. A lot of those people that are just trading in here, they're probably now feeling pretty nice about today as it's starting to move for them a little bit here. So yeah, interesting. Thanks for adding that indicator. That was really cool. Let's move through the rest of the markets here. Then we'll talk a few more companies later, including some of the companies that are tied to that Apple news. By the way, when you hear big news like that, like a Qualcomm kind of comes to mind, by the way, just quickly peek at a couple of these while it's on my mind. We'll just do it now. Like Qualcomm got a little bump this morning, because they're one of Apple's, production side, clients. Skyworks Solutions, SWKS, same kind of thing. It was up almost 2% a little bit earlier. Same kind of thing, bounced off support. So the Apple news, could it create even more opportunities with other companies? We'll see. We'll see how it works. But yeah, you sell 20, 30% more iPhones in 2021. That's going to be a good theme and a backdrop for Apple Computer. Let's move on. Let's go on to crude oil if we can next. Mark, I read an IEA forecast this morning, basically dropping their, expectations for barrel per day production next year and demand, saying that they just do not know when that demand will come back based on current COVID kind of data that's happening. See, they can't just skip forward 6 months, right? They have to actually go through it and have people consume the product. But crude is still showing a lot of strength, very much resolute here. Mark, what's your read on crude oil?
It's a pretty chart. I mean, how many days have you now been riding the 9? This is an extended period above the 9 EMA. We haven't seen a period like this in a bit. So every time it comes down, al goes by up, al goes by up, al goes by up, al goes by up, al goes by up. And so, like, when you look at that from a technical standpoint, Um, one time along the way, if there was any real bearish selling pressure, that moving average gives out, algos go down, you get a little bit bigger dip, kind of like you saw in the broad market recently, right? Finally fell below the 9, came down to the 20. That's normal price behavior. The fact that that hasn't happened in a while, and we've seen these extended runs above the 9 happen on numerous stocks along the way. Apple had a tremendous run this year. FedEx had a tremendous run, and there's a lot of different things. It shows to real resolute buying on any small little dip. And then you got a clean breakout signal there at right now. It's been pretty strong. It's been pretty strong.
Let's bring Greg in here on this crude oil discussion. Obviously, being a Canadian, you know a lot about the crude oil market. It's one of the biggest commodities up there, Greg, obviously, just from an economics perspective. How are you seeing crude oil right now, Greg?
Yeah, it's technically, like Mark said, it's beautiful. I think with the political landscape changing, actually, in your country, actually, is probably affecting it more than than our country. There's really not much going on right now in Canada from an oil perspective, but I think the changing of the guard in the U.S. might have those political factors might have a buoying effect, I guess, an uplifting effect on the price of oil, and we're kind of seeing that right now. I heard some scuttlebutt about OPEC kind of getting excited and Russia getting involved as well from an oil perspective, and those are your big players, right? So when you get those guys talking again and moving again, it tends to be able to shift demand, or not shift demand so much, but shift the price, I guess. Whether it's a drop in supply or a bump in demand, either one of those things can send the price skyward in a hurry. So, like I said, really, I don't see much coming from the Great White North from an oil perspective. I know we've got some projects that we're trying to push through, but it's going through all the process of that. Really, I think you look at oil right now as a technical pattern. It's almost stair stepping higher, which is what I really like. We had a bit of consolidation sideways, then a little bump. We did it again. We just had our next bump, and now we're running sideways again. We bumped right up to that 48 level. I'd love to see another pop above that 48. I think you get another run.
By the way, halftime crew, I don't know exactly what was going on there in the chat, so I just removed that. It was a little bit weird to me. But Greg, as you're talking here in crude oil, obviously, just the trend is very nice, though. It's got a little pop. In my opinion, Noah, I think we're headed for $50, but that's just kind of the way I'm seeing the left of the chart even before this. What are you seeing technically, Noah?
Let me back that out to the weekly time frame, because I think you're right, Tim. 50 is the price point where a lot of action has occurred. Support. It's tested many times. It's a price level where actually producers can be profitable, and $50 a barrel is kind of their benchmark for really actually having a profit margin. And it's been hanging out around $40 a barrel is kind of that minimum you want to see on price per barrel for producers. 50 is going to have a gravitational pull, and I think just based off what I'm seeing on the daily chart. And Mark, how many days did you say it was riding the 9?
Oh man, it was so many. I didn't count.
Well, I mean, just since the last big pullback, 11 days.
The 25 in the whole run. I mean, that's a long run.
Riding the 9, I like it. It looks like it's got upside, and I think 50 it may take it a little while. It might take a couple weeks for it to get out there, but I see a slow, steady grind, maybe a pullback in there, but it'll get there, I think.
Yeah, no, it looks like it's heading that way. And obviously it's been much more productive the last month than it was there for about 6-9 months or so. Had a weird 2020 here, oil has. Let's keep working through commodities next. Gold, if we can, then the dollar. And Noah, just give me a quick technical read. Start with the dollar, actually, finish on gold. Then I want to have a quick conversation about gold if we can. We are starting the 2-day FOMC policy meeting. We'll have Matt back tomorrow to kind of analyze and talk about any expectations out of the committee, out of Jerome Powell, out of the Fed. But for right now, the dollar looks like it wants to push, and it's pushing this 24.40 level, which Coach Matt did detail, quite a bit on yesterday's show as well, just kind of as a key support level in the short term. Noah, what are you seeing here in the dollar and then to gold?
Oh man, this is I don't know exactly what you call this, but money machine goes burr. Is that what they say? The printers. I think the stimulus news is going to cause the dollar to break if it doesn't break technically. I mean, this could just purely break off of technical pressure, but we know that the policy is going to be weak dollar policy, and I see that probably breaking down. So I don't see anything, that's not a ton of support to hold it up. Even from the weekly perspective, there's not a lot below it. So if it breaks, 24 it's not a far stretch. Not a lot holding it up. And again, policy is going to keep it weak. So best way to short the dollars to buy assets, right? Change your dollars for something.
Absolutely. And that inverse relationship with assets, one of the assets that's had an inverse correlation has been gold in the past. Take a peek at that chart on gold, and it's trying to finally hold this, little zone here. It's been a little bit of a mess the last couple of weeks, bouncing back and forth as the technicals churn together here. Noah, what are you seeing in gold?
Back it out to a weekly chart, and you got a big old macro bull flag, like just big.
Oh, before you get going on that, we have to remember as the technicals churn, that's, we were talking about soap operas earlier, like as the technicals churn, just somebody remember that, because I love that.
As the chart turns.
There's something about it.
I don't know. I like it.
Making butter, churning.
Little bit of drama there with the violation of the 200-day moving average. It got traders spooked out a bit, but I think the buy the dippers just came in, and that's a pretty good rally. Increase in size and rally, a possible higher low off of that same 200 period moving average, like the bullish signal candle here.
I mean, we go to a weekly chart real quick, because there was a technical bounce. I mean, you bounced almost to the penny on the 50 weekly. Like
it's almost as if they had like an algorithm set and programmed to
almost like that, right? Like, and that coincided with the old breakout level. Can
I chime in here? It's as the technicals churns, these are the trades of our lives. There you go. Tag it.
I love it.
Oh man,
I knew there was something there. Thank you, Greg.
Trades as sands through the hourglass. These are the trades of our lives.
Now I'm curious if Greg watched The Young and the Restless.
I will full on admit when I was a kid.
I am the young and the restless. Oh, wait a second. No, I'm the old and rested.
The old and resty. Yeah, young and the restless. My sister used to watch Days of Our Lives when I was in a kid in high school, and I'd come home from school and she'd fight me over the television and watch it. And so I actually knew quite a bit about the characters, more than I care to admit.
Yeah. I don't know about them.
Some of the characters are still on. Some of them are still on. It's been 20, 30 years now, and they're still on. So
they have the best plastic surgeons money can buy.
Yep.
Well, they don't last the test of time like gold, though. So eventually that show will die. What else have we got on gold here, guys? Because I'm interested. From a long-term perspective, I think everybody should be interested. Obviously, Matt has done a great job detailing the fundamentals behind gold. Everybody here, the coaches have talked about just the expanding balancing sheet and all that kind of stuff. And I see we're starting a Fed meeting here, the last one of the year, and Jerome Powell, making statements tomorrow could impact short-term price action. But Mark, we expect soft monetary policy moving forward, soft fiscal policy moving forward, and gold down here is just trying to fight through this. What do you have to see to want to go long here, Noah? I mean, if you were just looking from a technical perspective, where would some entry points be?
Well, I'm already long gold.
I'm already long.
If you're not long, right?
If you're not long and you're thinking about getting long, I think that 50 period moving average would be a great signal, because that coincides with the last resistance pivot. That would give you a higher low, and it would be breaking to a new higher high. That's textbook trend confirmation. If you can take out two catalysts like the 50 and the resistance zone, call it 1881, 1882 in that neighborhood. That I think creates, you might have a little bit of hang out there at 1900, but I'd be comfortable buying anywhere between that 1880 and 1900.
Great. Love it. Let's keep talking here. Let's keep moving. We'll talk more gold tomorrow, when we're dealing with the Fed meeting and whatnot. Take a look at Bitcoin if you can, Noah. Just quick technical read, and then we'll get into the stock news of the day.
Well, being one of the latest adopters of Bitcoin out there, this chart just makes me feel bad. That's all I have to say about that. Is I look at the chart and it's going so strong. That gap up energy is unreal. Maybe it is real, but it just looks so nice. And I think it's going to break that 20 or 20,000 mark. Matt's been tweeting about it, so it's good, right? Just because it's been out there on Twitter. But pretty chart. It's got that high base look and nothing to hold it back.
I think the story of the last 2 days is the fact that we held after the rounding top just failed, Mark. You know, it looked pretty precarious there last week as you were rounding over. It wasn't bearish by any stretch of the imagination. The bulls were happy with the defense and the fighting. I know I was and whatnot. Monday gapped up, stuck it on the intraday. And then now here we are just fading higher. That 20K mark is the ultimate one that we're going to be watching, obviously, for a breakout. Let's transition. Let's talk stocks here today. During our next segment, what we're going to do is we're going to go through some of the news of the day, stocks of the day, and then we're going to get into a few different ideas that Coach Greg has had recently, either a couple of trades that he's taken and made or a couple of cover call dividend plays that he's considering and looking at, just as an educational piece to kind of give you guys the, the way that an old money mind works when he's thinking about the markets here in 2020 at the back end. I'm looking forward to that conversation as well. Let's start with Baidu if we can here. No, a couple of quick ones. And I want to get Marky's take. Obviously, the electrical vehicle movement, Mark, has been just extraordinarily bullish this year. We know the names of like NIO and those types have just taken off. Obviously, Tesla, the first one that you're going to think about every time you think about EV makers and whatnot. Baidu is considering getting into that market. And just on the rumor alone, Mark, the stock is taking off and just absolutely going gangbusters here. Mark, do you think this is a good move for Baidu outside of the stock perspective? Does it put it on your radar with EV stocks? I mean, how do you read this here?
I mean, listen, that I could care less about any of the EV news, right? Listen, everyone's going to be an EV company, it seems these days. What I do care about is Noah bringing this stock, like the last couple of weeks, and we're going to do another one tomorrow night where we do the hot swing trading setups midweek. We've gotten great response on our YouTube show, so we're going to do that again tomorrow night. And Noah brought this last Wednesday night, and Noah was like, I might have to sell you into it, but go to like a 2 or a 3 year weekly chart on this. And it was a really just a nice little setup from a reversal pattern. Like all of you all spend time like figuring out how high things are going to go. Man, I spend my time at the bottom of the chart. And when Noah brought this setup, I was like, I love that for a quick hitter. Now it's already exceeded my target. It already filled that gap to the 200 weekly. But it was just a really nice reversal setup that, boy, no, it did not take much time to fill that target between the breakout and the 200, right?
Yeah, and I was just explaining those naked puts wish they were long calls. Yeah,
but no, it was it was a nice quality setup. It took off. I mean, and it's like with trading, there's a little bit for everybody out there. There's like, momentum traders, there's trend traders. And like, someone like me, I'm a reversal play support like kind of guy. I mean, there's just so many ways to succeed in trading. And I was just so happy that Noah brought this setup. I just loved it. I mean, that's why like when I heard Greg was going to be, because I was supposed to be on the show today, and I heard Greg was bringing setups. And this is what a community does. And this is the power of tackle trading. Is there's great education. We got all these modules. We got shows every night. We got the Traders Lounge in the morning. We got our weekend reports. But it's this collective effort in trading, because I don't have to succeed at Noah's expense or at Greg's expense or at Tim's. We can all succeed together. We're these little flies on the wall in this big, gigantic, multi-trillion-dollar market. And working together, bringing ideas together, it's just the power of community. And if you want to be part of the tackle trading community, go to the store tab, fill out that 15-day free trial. Attend us tomorrow night on the YouTube show. It's going to be another fun one. So they can get into EV all they want. Noah was the lead one on this one. It was a great setup last week, Noah.
So Noah, back on the daily chart then, obviously the news is when you're in a trade like this and you catch news, you feel obviously very fantastic about that. So you guys were looking at the reversal characteristics last week, potential breakout.
And that's really, Tim, that's about as good looking a reversal pattern as you're going to see on a chart. I mean, it took a while to form, but it came down, it found support at the $100 mark. I mean, that's a big psychological barrier. It tested a little bit lower, but for all intents and purposes, it actually found big support at 100, got back up above all the moving averages, and then it just had a really clean line at 150 for a break. I mean, it had a resistance test and a resistance test, so it put in that kind of cup and handle type pattern, plenty of room for it to run up to that 200-week moving average. So when we were looking at that,
and then you got this nice cherry on top of the sundae.
Yeah, that's just like, woo! I don't know. It's got to be a great feeling today for anybody who's long that and James is laughing all the way to the bank in the chat there. I've been in Baidu for months. So, all right. It's nice when you can brag in chat, isn't it?
I mean,
It is.
listen. I'm never going to take the joy out of a home run trade away from somebody. So no, absolutely.
No,
Great job,
that
James.
should be like high fives all around. In fact, I
Sure.
think you should buy pizza for everybody for lunch. That's what I think James should do.
Where's Coach Tyler? He'd be grandstanding the heck out of this if he were here.
Oh,
right
no
now, so.
doubt.
Well, I got a question for you guys now, because I mean, this breakout setup that you were watching, obviously you weren't expecting some huge news and volume to come in. So when you have something like this, Noah, after you'd already taken an entry that was designed as a swinger position trade, I mean, what do you do with the information now? Do you use the news and, lock in the profit? Do you roll stops? Like how do you approach that?
Well, one, I think one of the simplest things to do is just trail a stop. Like if you already have it, you're long, you're winning. If you got, directional trade, long stock, long calls, trail a stop, sell some, take a profit. If you like. The hold your nose and buy comment in there from Swin, that's a harder one for me. When I get this far away from moving averages, you can momentum trade this. You can buy above the high and trail a stop, but I might wait for the pullback. There's that old saying you always hear us, spit out from time to time. If you miss the pop, wait for the drop. And even if it's just a modest pullback for a couple of days, after that kind of news, there's got to be some spike into the football and profit taking here in the next little bit by people like James that are long, that they're just having a great time of it. And they're like, maybe I should take some profits.
There's another saying we got to remember: buy the rumor, sell the news, right? So
that's a good.
They're gonna get into the.
They say that in Canada too.
Thing.
That's cool.
Oh, yeah. They're gonna get in the electrical vehicle business. Okay, great rumor. Let's wait for the news to come out.
Well, and then Swin makes an awesome comment there. Just nibbling, like you don't have to buy a ton of shares. Just buy a couple. That's,
and if you're in it, you don't have to sell all your shares. You can just sell, a few to like take a little bit of profit. I mean, dramatic on these big moves. We've learned in trading over 10 years, right? Of this liquidity market within. You don't have to do dramatic things after a big profit. You can just sell part of your position, let the other run. So.
Greg, and this breakout actually makes me think of something you and I were talking about earlier, because, when I think of Greg Holmes, I've known you now for 5 years, and I got a pretty good feel for who you are as a trader and whatnot. I think of the dividend guy, the cover call guy, the stock guy, when there's opportunities and whatnot, and you've actually been increasing your exposure to breakout plays, and you've been talking a little bit, playing more delta here recently. Now, I can't imagine a world where you don't have cover calls, dividend, and focus on cash flow through theta. Through a part of your portfolio or a big part of your portfolio, but you have been taking advantage more of some of these breakout trades as well, right?
Yeah, 100%. So the thing is when you get some, we've had some pretty decent moves in all the indexes recently, right? So we had those March lows, and we've had a pretty steady run up in most things. And so when you get up these higher valuations, if you're going to be one of those longer term portfolio building, cash flow type traders, it's always nice to get things when they're on sale. And sometimes we get into these environments where it's harder to find those opportunities. So one of the things that we can do, and again, being a Canadian, we have certain rules we have to live by. And so we can only do certain things in our retirement accounts. I know there are some rules in the States as well. They're a little bit more lax in the States than they are in Canada. And so what this does sometimes is, if you're looking through your portfolio and you've got an idea of things that you want to own and cash flow over time, and I'm talking about core positions and building, long-term portfolios and things like that. If you're not seeing those opportunities, the good thing is there are always these opportunities for breakouts. Recently, I've got my core group of holdings that will, for me, probably never change. But I always want to kind of juice those returns, add to that ROI if I can. And the way I do that, and especially in these kinds of markets that we have right now, is breakout trades. Breakout stock trades have been fantastic. We've been doing a little bit of the stock report, the last little while here, and we've had some phenomenal picks from breakout standpoints. And I'm not talking the big, $200-300 price tag type stocks. I'm talking, $20 stocks and $30 stocks and things like that. They've been giving us some golden opportunities if you've been prepared to take advantage of them. And like I said, it's kind of a nice little way when you have that retirement account. Let's say you've got some stalwarts where you're kicking in 1 to 2% of cash flow a month. That's nice. That's great. Maybe you've got a couple high flyers where you're getting 3-4%. It's nice to throw in a couple of those ROI trades, short-term stock trades, swing trades, if you will, where you just take those quick hits and add to the capital. That also gives you more capital to invest in your longer-term positions as well. So I found myself using, like I said, a number of the picks from the stock report, just a few names, Mattel with some great trades.
Let's take a look at a few of them. Yeah.
Okay.
Bring up Mattel here, no? So these were some of the choices from recent reports where, you do such a good job with that report on the weekend. We all get together, we build these lists. And so you've been taking advantage of some of that research. Is that right?
Yeah. So like I said, this past weekend, I did the stock report there, and we had 16 bullish picks, 16 picks. That's a ton of picks. And actually the breakdown of the stock report was I was trying to explain, how we take advantage or how we can take advantage of a certain number of opportunities. Well, this Mattel trade happened to be, and it's actually been several times now. This was a pick, I want to say, geez, I think we had this almost a month ago. And so, we've had this is probably the third breakout attempt we've had in less than a month, right? So what we had this pick on the stock report. I think the week that, and you guys can clarify if I'm wrong, but I think the week that we had this on the report, I don't know that it actually triggered that week, but it triggered the following week. And then it gave us this nice little pop and then this sideways run. And I know myself, I've taken advantage of this, just this breakout. Basically, it started resistance. I can't really see what that date is, but basically there was like a 2-week run sideways and then a pop up. And then we got a run for about 6 or 7 days and then another run sideways. And now we just got another pop today, right? So this stock has been showing us this. If you look at all the way back to March, it's been doing this, I can see 1, 2, 3, probably about 5 or 6 or 7 times that this particular stock has done that. So once these stocks are on your radar, it's really an opportunity if you pay attention to get into these types of trades. So Mattel was one that did really well. Another one was KBR that I'm currently in. This was from a couple of weeks ago. This one here got a little pop a couple of weeks ago. It's just consolidating sideways now. Depending on where your stop loss was, you could still be in this or out with a slight profit, depending on how you played this. Like I said, myself, I'm still in this one, and I'm still looking for that. There's another breakout that has some potential here. I think the overall target I was looking at was this old high back here of 32. And I still think it has the potential to do that. So lots of stock picks like this have been working out. And like I said, this is a little way to add to that bankroll by using these types of breakout trades. We had a bunch of retracement trades in this week's report as well that just beautiful setups. A couple of them triggered yesterday. We talked about the semiconductor index. ON was a real nice one they had on the weekend there. It's one of the ones we discussed. Little pullback there, breakout or pullback to a hammer candle there, broke out yesterday, just slightly higher today, maybe a little bit of work to get back up to that 32.50, but definitely an opportunity there. And then again, one of the things that I talked about in the stock report that I really like about these types of setups, you got a textbook pullback to a reversal candle, you get confirmation the next day. Now you've got to run up to a former level of which would be probably resistance, but then you've also got that breakout opportunity. So with the semiconductors being so hot, we could get that breakout in a nice run to 35 as well. Taiwan Semiconductors, another beautiful pick on there. So all of these opportunities have been sitting there waiting for us, and all you got to do is be ready to take advantage of them.
Yeah, and I love the concept there. In fact, I was writing about that and thinking about it this morning in the Tackle Today email. As the markets are churning back and forth here in mid-month, markets are still bullish. I'm very much looking forward to breakout opportunities and other potential trading setups like we saw, throughout the day here as we've been talking markets. But until that happens, there's also the opportunity for theta and cash flow. And Mark, I know you've been loving these markets in that regard. I really think that every trader out there needs to learn how to do more than one tactic. You should have the skills to be able to play a momentum breakout and run your trail stop through the step system principles. You get great setups over the weekend, and you come in on a Monday, Tuesday morning, you get your trigger, you get your entry, you put your position size out there. Nothing wrong with trading delta and trading momentum. And I also believe that same trader should be able to put on a cover call and understand how to manage that for a 2% return on cash flow, different tactics to approach market conditions as they change. And Greg, as you've been playing more of these breakouts, you've also started looking at cover call setups as well. You're not going to stop doing that after doing it that way for 10, 12 years now. I mean, it's not like you're going to reinvent the wheel in the way that you approach portfolio design. So what are some, and this is one thing I want to talk about today, and I think we can have some fun with it. What are some of your favorite cover call setups right now? And what are some of the stocks that you've been watching? And Noah, as we go through this, I think it'd be great if you could also, as we look at the companies, let's go to the trade tab. Let's discuss, delta and strike price and that kind of thing.
You bet.
So yeah, there's probably about three that I looked at today. That one's more of I want to call it more of a position to a longer term trade, and then a couple were what I call quick hitters. Okay, so depending on your rules, and everybody's got their own different rules for doing cover calls. I like to do I like to make a choice before I get into any one trade. Obviously, I want to find the right setup. It's got to be, it's got to be a good quality stock. It's got to have a nice pattern setting, all that. But then I make myself a choice, and I ask myself, is this something where I want to loan, say long term or a little bit longer term? If it is, then the stock has to meet certain criteria. If it's what I call a quick hitter, the stock still has to have a certain fundamental background to it and a setup to it, but it might be something that I'm only going to own for 30 days, 60 days, something like that. And I'm going to play it in a certain fashion. So three of them that I found. One of them that I'm looking at right now is US Steel. So US Steel for me used to be a core holding. They were a great dividend payer. Unfortunately, they ran into some trouble the last few years, and they ended up cutting their dividend. So with this one here, I've changed my tune from being, a longer term trade that I might hold to what I call a quick hitter. And the reason I like this setup is you got this beautiful run right up to the high, which was exactly $20, which is Noah will tell you all day long, that's a psychological level. So it got right up to that high, and then it's given us this pullback, and it's come right back, and we're looking for that support where it is right about now. And now we're looking at this green doji type candle forming today. So this one here, if it obviously, I'm not doing anything with this today, but it's on my radar, because if I got a candle, a confirmation candle to the upside tomorrow or the following day, then basically this tells me that this is a beautiful pullback to support and then heading back up. This is where I take the opportunity at a $17, $18 stock and be able to buy into the stock without a massive cash outlay, and be able to do a cover call. Now, if you look at the cover call on this, because I'm doing a quick hitter, I'm looking at probably a 30 or even a 40 delta. So we go to January 15th, which is the monthlies. That's 31 days out, and we go to say a 40 delta, right?
Yep, they're 19, right?
Looking at between 94 and 97 cents for a premium. Now, if you do the math on that from a $17, let's say we end up paying $18 after the confirmation. So we'll say we get 95 divided by 18. You're talking about 5.2% there return in 31 days. That to me is a very nice quick hit cover call on a stock that is doing well, and also it's in the metals space, not the metals space per se, but the industrial steel space. I like where that's headed right now. We've got to see a little bit of a rebound in that space as well. As you can see, it's kind of been working its way higher. All of this I really like, and that return 5% in a month on an $18 stock is pretty good. Now, you must understand that 5% in a month on a stock like this, you can see those candles are pretty big. So there is going to be some volatility to it. That's the trade-off we have when we use these type of stocks.
Well, let's talk about this X for a minute here, because I would, because I've done a lot of cover calls in my career, obviously, like everyone here has. Any veteran trader is going to end up using equity and call options to generate cash flow, depending on market condition. And X is over 5%. And I've always had a rule when I'm talking to a brand new trader, somebody right off the turnip truck, not a veteran, veteran's a different conversation. But when you start pushing ROI numbers up above 4 or 5%, then you're adding degree of difficulty and risk. I mean, that's the inherent relationship in the market, right? More reward, there's more risk. That you can't get around that. That's the nature of how option pricing works. So I would call this a big boy trade, no doubt about it. It definitely looks like an interesting setup from like a trade perspective, just a one-off if you're looking for return. But Mark, when you have ROIs going up, if somebody's a newer cover call trader, they might prefer choosing something a little bit more boring, I would say. Is that right? Would you agree?
Yes. I mean, listen,
Mic down, my bro.
Oh, excuse me.
And by the way, none of this, real quick, Mark, none of this is criticism of this trade setup, Greg, by the way, because, as a veteran, I see exactly what you're seeing here, but I just want to hear Mark's thoughts on that.
Like on something like this, if it's something that as for me personally, if I'm willing to cost average down, I love it. And I take advantage of these setups right now. Like I have probably in the last week, almost identical setups done something like this 3 or 4 times on different companies. So the one thing new traders do run into in this is that because of that volatility, they freak out, right? They freak out because big down day and they're like, and they're prone to do things that are less than optimal. So these type of volatility trades have been very, very, very good in the last month, produced really nice returns. I'll continue to do them, but like when I have a big down day, I don't give 2 craps. And so it's like, it's one of those, bring experience with you when you do them, or realize that you're going to have some volatility on these trades.
Go back to the trade tab for a minute. You mentioned the $20 mark there, Greg. I want to ask you a question on this because we're looking at that 93 cents right at the 19. Have you thought about maybe selling the 20, kind of as a natural target, lowering the delta and opening the risk graph a little bit? How do you make decision on strike price there?
Yeah, so I do it by, I basically do it by that first question that I ask myself. How long am I willing to hold this trade, right? So with US Steel, like I said, they've got a pretty good market share. They're a pretty solid company. So I don't have a problem owning them. For myself, if I consider this what I call those quick hit trades, or you call it the big boy trades, I want a little more ROI. And so I don't mind going to the 19 because I know that I'm buying this at 18 anyway, and I'm completely okay if somebody takes it away from me. I really have no issue with that. Now, if I were doing this where I might hold this a little bit longer, or a little bit longer term, then I'm probably looking closer to that 30 delta, or maybe even if I really like the stock, if I've got a stalwart like KHC, Coca-Cola, something like that, I'm usually going to a 20 delta because I don't want to lose the stock. In this particular case, because the fundamental nature of US Steel changed a while back when they cut their dividend, I don't mind losing the stock, so I don't mind going closer, and that's kind of how I determine my delta rule. Now, with this one here, like I said, I'm just trying to juice that ROI. That ROI, even at getting what is that, about 60, we probably get about 67 cents there, 66. So if we do that, 18, that's still a 3.5% return. So I have no issue with that. And yes, you are at a resistance level, or you would be at a double top level at that 20. So I don't have an issue with that either. It's personal choice, I think, when you choose whatever delta you're going to use. Like I said, for me, a quick hit, I'm looking for that bang, but I think you guys made a good point. That is more of an experienced trade. Now, I do have a trade that I think takes a little less experienced than that. But
well, and I want to get into that right now, and I do appreciate the analysis. And one thing I asked Greg here to do, guys, is kind of help you guys understand the logic behind how he selects some of the stuff. And we wanted to find one more aggressive one, that's the X, and probably a couple of more conservative ones, Greg, so that we can kind of look at them separately. I think EXC would be an interesting one to look at next, Greg, based on the way you were describing it to me in pre-production, the way you were thinking about this. So what about this Exelon?
Yeah, so Exelon, it's a utility company. So if you look at the utility sector, the utility sector has been having a little bit of a rebound after being in the dumps for a while. So I like the fact that we've got a little bit of a boost there. As you can see, this thing here from March on has just been working higher. The one thing that I like most about this particular setup is this nice rounding bottom here, and then this fire off that we got today. Okay, so whenever I'm looking in the markets, the rounding tops, rounding bottoms typically tell me that we're due for a direction change. Okay, so looking at that, I really found this one to be nice, and we're getting that bump, which puts us above the moving averages as well. So from a technical standpoint, that's what I really like. What I really like on the fundamental side of this, and this is something that I always look at when I start looking at cover calls. The cover calls, because you're going to own the stock, you got to have some idea of what the company, what kind of footing they're on, what kind of, like longevity they have, these kinds of things. So Exelon is a decent dividend payer. They did cut their dividend payment a couple of years ago, but they've bumped it up ever since then, and they're still at I think just under 4% dividend payment for Exelon here. What I really like about this is that this company's been paying dividends since, I believe, 1902. So that's a little bit longer than I've been around, just slightly. So it tells me that they've got a dividend history. That gives me some comfort, I guess, in the fact that if they've been around that long, they're probably going to be around a little bit longer. Now, there's more to fundamental analysis than that. You got to look at balance sheets and all that stuff. I won't go down that rabbit hole. But I like this company, and this is a company that I could hold a little bit longer. Now, when you start looking at something like this, we've got the technical setup, we got the breakout going here. This is when we want to be able to buy into these things. And then if we look at the trade tab, we're still able to get 1.5 to 2% on that 31 days here. So if we look for close to 30 delta, you could either look at the 45 or you could look at the 44, and your return on investment again. So let's look at the 44. We'd be looking at about 70 cents. Divide that by the 42.72 if we bought it right now. So you're about 1.5% return there on a stock that's not going to move. You're not going to have the same volatility in an Exelon that you're going to have in a U.S. Steel. So this is going to be one of those plays where you make that decision up front. Is this something I'm going to hold for a while, or is it something that I'm just trying to make an ROI? And this is more, like I said, this is for your more conservative traders. You've got a fundamental base to it. You've got a technical setup, and yet you still got an opportunity to make some decent money there.
Mm-hmm. 70 cents on a 34 delta on a utility company that's got some pretty strong support seems like a much more conservative trade in that regard, obviously. Marky, one thing I wanted to do here, and I think Greg's done a really good job, is kind of highlight the nature of how just a coach, a veteran, is approaching market conditions here in December of 2020. And I was talking with Greg before the show today, always enjoying conversations with you, Greg. And he was talking about his breakout trades with Delta, but he was talking about his covered calls, some more aggressive, some more conservative, using the systems that he's developed and learned under mentorship over the years. Marky, what do you think of this Exelon trade here? Pretty interesting one in my opinion.
Listen, you have this thing called margin, right? And we want to maximize our margin, and we want to maximize things. I like having a couple low percentage returns, because I'm not going to have everything in crazy stocks, right? That's just irresponsible. And I become more responsible every day in 2020. But I do try to stick to my rules and have some nice, boring cash flow plays. Areas of the market that I'm willing to, if it dips, cost average down. And so if you pull up the chart, when I see this stock, I'm like, listen, utilities has some juice a little bit, but it also has, let's say, for whatever reason, things got out of control in the short term. I got massive support areas down below even further, in which so when I look at this chart, I'm like, if the momentum dies here, if the cash flow dies and it goes down and I lose in the short term on a position, I got an easy cost average down candidate in a big secure area of the market. So whether you want to start that position with a naked put, or whether you want to do cash flow on the covered call side, I like these boring areas of the market so I can focus on other more aggressive area of the market as part of my portfolio.
So here's what's going on in my head, Mark. I'm calculating the number of McRibs you could buy if you sold the 38 strike price versus the 39 strike price. And I've got a little story problem going on in my head. If Mark sold one contract at 39, how many McRibs could he buy?
6, I think. How much are they? How much is McRib?
Listen, it's about $7.50 for the extra value meal. So
you need to sell 2 contracts to get your fill.
$4 each.
That's like $42 Canadian.
Before we go down that path, though, there was one more, Greg, that you had that I was interested in. I think the conversation's going great, so I'd love to hear your logic behind your third one, and then we'll pivot to the last news of the show. But what was I think it was SPG, I believe.
Simon Property Group. So again, another dividend payer here, not as good as Exelon, a little bit different there. It's a bigger dollar stock, so this is where portfolio size comes in. So we talked about a higher volatility. We've talked about kind of a slower mover. Now we've got a bigger dollar stock here. Again, nice retracement down to the 20 years. So we got a technical setup. This is just starting as far as I'm concerned. It's been meandering up since March, but this is really just starting its phase to take off as far as I'm concerned. It's got once it gets past that 100 there, it's got a lot of room to run to get back to where it was. So I like to call this rarefied air. There's a lot of opportunity for this to run up, which is decent. But from a covered call standpoint, like I said, if you're willing to put out the higher dollar price tag here, the 89, again, this is another one where it's probably if I'm going to ask myself that question, is this something I'm going to own long term or a quick hitter? This is more a quick hitter for me. If we look at the trade tab, I forget what the return on this was. I really like the technical setup, but yeah, that's what it was. So at 95, I think there's some resistance. If we go back to the chart there, Noah.
Oh, back to the chart. Now you got to take me to the trade tab.
Sorry.
Go back to the charts. It's all good.
Yeah. So 95 would be that resistance zone, right? I would make a double top there. So we go into the trade tab there, right? And we go to that 95 there. So you're looking at about 275-ish as a return. Mm-hmm. So a 35 delta. Mm-hmm. Yeah. So 34 delta there, 275 divided by 89.10. So you're still looking at 3% there, right? So again, not a bad company, right? Got some fundamental strength somewhat behind it. I like the technical setup, pullback. It's still stair stepping higher. We got higher lows and higher highs, and yet you can still pull 3% in from this, and that's on a cash basis. Obviously, if you're doing margin, that bumps up again. So, like I said, the setups I like. Again, I looked at Simon Property Group. I believe they pay a dividend. I can't remember the exact number, but I did like the setup of this one, and I like the fact that even on a cash basis, if you're using an IRA or an RSP here in Canada, you can do this on a cash basis and still pull down 3%, which is pretty decent for a covered call candidate.
So these are some you're considering, and you're going through your research process and whatnot. And obviously that's a part of doing cash flow and covered call trading. You got your watch list, but there's a couple here, X and SPG, that you're approaching more as a trade from what I'm hearing. Whereas the Exelon sounds like it could end up, could potentially be more of an investment. Greg, is that right?
Yeah. So that's that first question I asked myself, right? Is this a core position? This is probably the best way to answer that is this a core position? If it is, then yes, I expect that my ROI is going to be lower. I'm expecting to hold it for an extended period of time. Is this going to be a position trade? Am I willing to hold this for 3-6 months, whatever the case may be? If that's the case, then it's going to be a different type of fundamental stock. And then there's going to be what I call these quick hitters. Like X is a more volatile trade, but like I said, on a cash basis, you're over 5%. On a margin basis, you'd be even more, obviously. Simon Property Group here, again, fundamental, reasonable fundamentals in this one here. This one, again, I'd be asking myself, okay, am I willing to hold this for a month, or do I want to hold it for 6 months, or do I want to hold it for 10 years? Once you answer that question, then you can make that decision of how you're going to play these. And that, again, that's where I will adjust my delta rule. With something volatile, I'm probably going to go a bit higher delta. With something that I want to keep and I want to make sure that I hold on to it, I'm probably going to go a little bit lower delta there. But I always want to make that determination before, when I find these candidates and I do my research, I want to make that determination of how long I'm willing to hold a specific position, and then I play it in that manner.
Mm-hmm. Love the thought process there, Greg. And I think the most important part of it is listening into that. Go ahead.
Let me throw one out to Greg. It's one we've been talking about recently, kind of QSR. So we've been talking about QSR in our pro community for a little bit now, Greg. Yeah. And you go to a weekly chart. We have this really long consolidation range. QSR, I like the space, like the company, and we finally have a breakout of here. How would you approach this?
Okay, great question. So QSR, this has actually been on my radar for a long time. I've actually traded this a few times. I like QSR. The first thing you did when you just mentioned the ticker symbol, I immediately went to the dividend information. So the thing about QSR is they don't have a long dividend history, which is okay. They do have a pretty decent dividend. They're about 3.4% dividend payout. The only concern I would have about this from a fundamental perspective is their dividend payout ratio is over 100%, which can be a little bit scary sometimes. But as a breakout play, again, I'm asking myself that same question: is this something I want to own long term? I would do a little bit more research in this. I haven't looked at the fundamentals recently. Are they making cash flow? What's their balance sheet and their income statements look like? Do they have more assets than liabilities? All of these kind of things I would look into. This one here, because they've got a decent dividend, I'd probably want to hold this one longer than like a U.S. Steel. Like I said, they do kind of have a dividend history so far. It's just not a long one. So in this one here, I would wait for it to break out, which it kind of has already just broke out there, but wait for it to break out. Then I'd be interested in buying this and doing a covered call. This one here, because I would actually want to hold this. I think it's got some upside to it, especially up to that 80 mark over long term. So I would probably want to sell a lower delta on this one, like 20, 30 delta.
That's textbook perfect. Do some fundamental research for me so I don't have to do it.
Well, like I said, I just went, I got, the resource for dividends. That's the first place I look, because honestly, if it doesn't have, if they can't reward me as a shareholder and do that for a long length of time, then it doesn't give me a warm, fuzzy feeling about how long I want to hold this, right? You take something like, Hormel Foods that's played, 43 years of consecutive dividend increases. I feel that I can hold something like that for the next 43 years, right? Now, QSR being kind of newer to the dividend game, I think they're going to do well, and do I think they're going to continue to pay dividends? I do. They just don't show me that history. So that's kind of where I start with my fundamental analysis. Then I'm just going to go and I'm going to keep it super, super basic. I try not to complicate things, because there's enough complication in a financial markets to begin with. And I think at Tackle Trading, we do a great job of simplifying this stuff. But basically, I want to know, what are their assets and what are their liabilities? If they've got more assets than liabilities, that tells me they're in good shape. If they've got lots of cash flow or cash that they're sitting on, that also gives me a warm, fuzzy feeling. The third thing I look at is products. Right? What are their products? So Restaurant Brands International, what are they selling, right? If I went and kind of looked this up, right, I can go quickly and say, okay, what do they do? Well, they're a holding company. They've got some of the best restaurants I don't want to say best restaurants, probably some of the most well-known restaurants under their brand, your Tim Hortons, the world, Burger Kings, all that kinds of things, right? So, I don't see those kinds of businesses going anywhere in the short term. I expect they'd be around for long term. So you can use that fundamental.
And you guys got a ton of Tim Hortons up there in Canada, don't you?
I noticed how he put it first, like top of the entire pecking order.
Did you also hear when he backed out of the comment of great restaurants? So I'm not sure about
Popeye's chicken is delicious. Double Whopper, the Texas Double Whopper is delicious. I'm not that familiar with Tim Hortons. I know you have a bunch of them up in Canada.
Yeah, well, there is some in the States as well. Just I don't think out in Utah where you guys are, but yeah. So Tim Hortons are like buses here. If you don't see one, just wait 15 minutes, another one will pop up. So yeah, they're pretty much everywhere here. They're a Canadian icon actually that was bought by 3 guys from Brazil. But whatever, that's another story for another day. But anyway, yeah. So those kind of brands like Popeyes, like you said, and Burger King. Burger King's a massive brand. Tim Hortons here in Canada is a massive brand. So a company that has those massive brands, has the ability to be around long term. And that's where you can start to build. If you're starting to build these longer term portfolios, this is where you can grab those core positions and you can start building them up, obviously taking into consideration all the fundamental data that we've kind of gone through there.
Mm-hmm. And by the way, Mark, you said, please do some fundamental research for me. That's actually what Coach Matt is doing this week. One of the reasons why he's not here today, he's diving deep into the fundamental research behind some of our watch lists, including the Tackle 25 that we're starting to get ready for its 2021 release. And I love this kind of talk, by the way, Greg. I love the discussion here today. In fact, if you're out there and you're watching the show, let's give a big shout out to Coach Greg. Everybody say, great job, Greg. Thank you, Greg. However you want to say you appreciate it, because I'm sure everybody out there watching this just learned something or got some value from that segment right there, my friend. Good job, Greg.
Yep. Thanks. Appreciate it.
All right, let's talk a couple last storylines here. I've got, see if you guys got any read on this. Deere first here, Noah. I'm interested in industrials. They actually got an outperform rating from Oppenheimer today. Little bit of a rally. Noah, I'm eyeing a breakout up here. What's your read?
Well, I just had to check the cat chart along with the Deere chart because they both look so pretty. The industrials look good. I mean, check out the industrial sector, poised for the break, right? Deere, good looking chart. Cat, good looking chart. Back to Tim's pick here, the Deere. That's pretty. I like everything about it. Might want to wait for it to clear that high at right above that little flag price out there. That's a perfect little entry, clean line in the sand. Nothing to not like about the chart. Easy to control risk with stop loss and proper position sizing. Good looking setup.
Mm-hmm. And then another one here, Marriott or Hilton. You can bring me up either one or both. Marky, the Citigroup analyst, upgraded the hotel operators to buy from neutral, saying that the industry is on a cusp of a multi-year recovery, obviously buying into the, kind of reopening theme in 2021, the economy getting back to normal and all that kind of stuff. Mark, do you have any interest in the hotels right now?
Yeah, listen, listen, there are so many ways, because I believe in the multi-year recovery theme for the companies that got beat up. I believe life returns to normal. I believe the vaccine gets out there. I believe life returns to normal. It's all a question for me, and I say this, I've said this probably 100 times over the last 6 months. How do you want to play that? Movie theaters, cruise lines, hotels, restaurants, casinos. I mean, there's so many different ways to play that theme. It's the one that you feel the most comfortable with. It's the companies you feel most comfortable with. There's lots of ways to play it. There have been lots of ways to play it for the last 6, 7, 8 months now. Mm-hmm. And so it's just all a matter of a percentage of your portfolio that represents whatever percentage you feel comfortable with, and what of those groups do you feel comfortable with. If we return to normal, all of these companies are higher 3 years from now. So it's just, where do you want to play that along the way?
Mm-hmm. Markets are expanding their rally here, by the way, intraday. Let's move back on the S&P if we can here, Noah, as we start getting final thoughts for the show on a Tuesday, 12/15/2020. A couple things make sure that we do here before we end. Mark, what do we got going on at Tackle Trading today? Coach's show tonight, I believe. Is that right?
We got Greg Holmes. If you like Greg, we got a double dose of our Canadian friend tonight with Tyler Craig on the Coach's show. And so we got Coach's show tonight, and then tomorrow we got the YouTube thing we're going to do here, and then we got Cash Flow Condors tomorrow night as well, along with our Traders Lounge in the morning. So big 24-hour stretch for us. it's good content as always.
Greg, final thoughts from you, sir?
Yeah, just watch the charts. There's just so many opportunities right now. This recent pullback just gave us I love the term golden opportunities, right? We've had some great breakouts. Get into those reports. I'm telling you, the reports recently have been fantastic. Emily did one a couple of weeks ago that was just out of this world good. Get into those reports, get on those stock trades, get on those option trades. There's just a host of opportunities that this little, I guess Tyler calls it the baby pullback here that we got. It looks like it's finding some legs here, and we can definitely take advantage of that opportunity.
Fantastic. Noah, final thoughts from you? Noah,
sorry, I had to hit the mute button there.
No worries, brother.
Well, hey, final thoughts. Let's take a look at applied materials there for Dina. My final thought is, what do you want me to do? Buy it, Dina? Help drive the prices higher? Is that how am I going to save you from that? I like it. It's not a bad high base. Final thoughts. Have a great day, everybody. We're gonna have a great time at the Coaches Show tonight. I can't wait to attend that after I get off what I'm doing, so I can listen to Greg and Tyler talk. That'll be great.
I agree. One thing I love about trading in the mornings, the way my routine is, by the time I'm, at the halftime show, I've already done all my trading, halftime report. By the time I do that, I can start moving on to the things, final adjustments before the bell market to mountain time. It's a wonderful, wonderful market to be in. No question about it. Marky, final thoughts from you, sir.
The same thing as always, right? I mean, this has been a great cash flow environment for the last month. We just look at the support levels. It's held the 23 days in a row. There are support levels even underneath that. It's been a great environment. And the only, in these great environments, and it's something I have to remind myself of every day, don't break your rules. Don't over leverage. I have to remind myself every day, be happy making money. It's been a great cash flow environment. There's been some good directional trades out there. Just be responsible in the whole thing and be happy making money, be happy making good money, right? You don't have to become a millionaire overnight. Get rich slow, as Tim says. I love that. And that is what I'm reminding myself every day in this great market right now.
And my final thought's simple. I just, love coming in doing the show, and just today and yesterday and every day is always a lot of fun coming and talking to the community out there. Markets, the conditions are going to go back and forth and churn and change. And then, you'll get your opportunities. Just always remind yourself and remember a commitment to financial education is one of the best things you'll ever do for your life. There's no question about it. I was on a walk with my daughter yesterday, who's recently home from the Army, and we're talking finance and all that kind of stuff. And it's just like, start young, start new, start fresh, start wherever you are in your life, but start learning how to do things. If we had the discussion today about cover calls and it was too fast for you, maybe if you're brand new or something like that, that's normal. Don't ever let those moments stop you from wanting to learn something. Dig into a course, dig into education, find the medium that's going to help you understand the content, keep putting your butt in the seat and learning from coaches and veterans like Mark, Noah, myself, and Greg here today. And you're going to put yourself on a path towards success. And that's all really you can do in life. So Greg, I thoroughly appreciated the analysis you did today. Appreciate that. Coaches, great job today. And out there, Team Tackle, just have a safe, wonderful day. We will be on a Coaches Show tonight, 8:30 Eastern. Tomorrow, we're back live with 2 shows on YouTube, including our Wednesday special that we do at 7 o'clock Eastern, and this halftime report, 12:30 Eastern. If you're new and haven't done it yet, click subscribe, click the bell, come back and join us, be a part of the conversation and participate in the chat. We'd love to have you on our team here at Tackle Trading. And if you are not yet a pro member of Tackle Trading, it's very simple. There is a link to a trial where you can come get 15 days for free to see what all of our coaches do, training people on the back end, including those great reports, which Greg has been a big part of the stock report here recently. Go back and review some of those and get some of that education. I think you'll be pretty amazed at what you can get from that. So, all right, guys, we are done here.